Good morning. Well, in South Africa, it is morning, guys, but good morning, everybody. Morning, 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 morning. If you are somewhere else, then obviously it's afternoon. Let me just, all right. So let us jump away, guys. So one of the things that I had a lot of requests for was to start a trading hour, because I do share a lot of my P&L with people. I share what I do and how I trade and what types of trades I take. And I had a lot of people reaching out to me saying to me, Marnie, don't you want to just show us what you do? Where do you learn? You know, what are the resources that you use? How did you become profitable as a trader? And, you know, what are the indicators that you use? What is the strategies that you use? Now, I have two types of strategies that I use. I am a bit of a swing trader, and I'm also doing some day trading. I don't trade under the 15-minute chart at all. Does that mean that you don't need to do that? You can by all means go and trade on the below the 15-minute chart if you have a proven strategy that is going to give you the results that you are looking for. For me personally, I don't do that. I like the 15-minute, and then obviously my favorite time frame on swing trading is 1 to 3 days. That's the type of charts that I look at and I use to actually trade on. So guys, let me share my trades for today. So obviously this is TradingView. I found this is the easiest way to show you guys what I do and just to give you an idea of the different types of trades that I take. So obviously for me personally, one of the trades I love trading is gold. I absolutely love gold against the dollar. Then on my indices side, I actually like trading my NASDAQ, my NASDAQ 100, as well as your NASDAQ Dow Jones, the 30. So I like trading these two. As you can see, I've currently in 2 trades with them. So I absolutely love trading here. I've also got a trade going on gold, and I'll explain to you now why I took a trade on gold. But then I obviously also like to trade some of my Forex pairs. Like I like to do the USD CAD. I like to do the US dollar against the Swiss franc. That's a really fun one. Obviously the British pound against the US dollar, New Zealand dollar and US dollar, Australian dollar and the US dollar. And then I obviously also like the Japanese yen. Oh, this did a beautiful drop yesterday. This was quite interesting. Then obviously some of the euros as well. I do like the euro against the Canadian dollar. And then I also like euro against the Australian dollar. And then the last one that I do is I do the euro and Japanese yen. These are the only pairs that you will ever see me trade. Swing trading, I do like a bit of stock trading there. But normally that is more on the strategies that Warren Buffett has, where I do long-term types of trades. So that would be trades that I go into for months and years, like really, really long. But other than that, so on my daily trading, I have a couple of indicators that I use. So one of the indicators that I use is I like the Dava strategy, where I love the way he traded. I loved his style of trading. And obviously with technology, you have some great indicators that you can use for that. And then obviously the 200-day simple moving average. You know, I like the SMA because it gives me an indication of an up or a down. So it always indicates to me on what side the market is in that period. And it allows me to cut out a lot of the choppiness that happens in the market. Guys, I apologize for my daughter in the back. She, for you guys that don't know, I'm a mother of 4 and they are homeschooled, and they're around me all the time. So, yeah, if you do get some background noise, that is my children. All right. So from the gold's perspective, so these are the indicators that I use. I'm not going to go too in depth with the indicators that I use. I will do separate videos on that where I explain to you why I use these indicators and why I found success with them. But I think the important part is for you to understand and be able to read the market structure. One of the things that I find a lot of traders do is they want to start trading, but they don't understand the basics and the fundamentals. And when I talk about those two, I truly and honestly mean what I say. If you don't understand the basics and you can't read support, zones. You can't read liquidity zones. You are going to battle to stay profitable in the market. Now, obviously, on my indicators, this morning I was opening up gold, and yesterday I had a very, very bad well, actually, no, it was a bad trade. It hit my stop loss here on gold. This was a bit of a negative one, and then I just left the market alone. Obviously, I finish off at about 5 o'clock. So if you look at my charts here, I finish off trading at about 5 o'clock. And I start trading at about between 7 to 8 o'clock. That's where I normally start. So I had this first stop out here, and then I just saw a lot of choppiness in the market. Then we had this big fall through, which was actually a great trade. I did miss this one, but then I tried later on to look for an opportunity here. There was some opportunities presenting itself here, but from a volume perspective, the market just didn't have the volume for me, and that's why I stayed out of it. But this morning I did take a trade towards the downside, because I do think, if you look at the overall trend in the short term, is gold is going to be coming down a bit more. Then obviously on the NASDAQ, another one that I'm trading here, I'm just measuring here. So I do a lot of my technical analysis on this, and then I actually take my trades in my trading account separately. And that's where, so I like to pan out. So as you guys can see here, I was watching the market. We had that same type of fall here, which was normal. I mean, if the dollar falls, all markets fall. And then we had a bit of a retracement. It touched here on the 200, and then it came back down, and I was watching it. And obviously it made a nice breakthrough here. And as you guys can see, I will be TPing now in the next couple of seconds. So I think this next candle might give me a TP. And then I will grab another 0.3% here on my trading account. So that's really, really good. Unfortunately, guys, I don't show my trading account at all. I believe that is confidential information. You will never see me sharing my actual trading account, and it's also, I think it's very, very wrong of traders to actually show that to people, because you set unrealistic expectations. When someone tries to accumulate and grow to a big account, they feel very negative that the small amounts that they make out of their trades is not enough, and they want that $1 million account, but they don't understand that we all started small. So you needed to start and be consistent over time. So as you guys can see, obviously this one has gone in my direction. This one obviously has now been doing a bit of a retracement here. So we are going to see, from a volume perspective, we do have, the selling power coming in. So we'll see how strong that trend is. It's not looking so strong to me at this point. So we might see some more upwards movement, as you can see the 200-day. So we will be looking at taking at least a $95 on that one for today. And then, other than that, we are waiting for some volume to come into the market. We have seen a bit of upwards movement, but obviously I don't take any upwards trades, if I'm underneath the 200-day moving average. And this is an exponential moving average. So it is tracking the volatility in the market. And there's no way that I will take a trade when it is under the 200-day moving average. I'm only looking for selling opportunities. I'm a trend trader. I trade with a trend. Then, on the dollar and the Swiss franc, obviously, we had a nice downwards movement yesterday. I was waiting for it the whole day. It was all choppy around this area the whole day, and then it broke through, but it did give some volume here. I'm someone that I'm very strict on my rules of trading. So I have very strict rules and guidelines whenever I trade. So normally when I look for a breakthrough, I'm looking for a strong trend through it. Obviously here, the market was up and down. There was a lot of choppiness in it. And then obviously at midnight, run about there, it broke through, which means, guys, I didn't get the trade, but I think this is one of the parts I want to touch on with a lot of traders is when they look at the market, they look at the opportunities that they missed. And that puts a very negative mindset. So if I go and sit down and say, I was watching the market the whole day yesterday, it didn't offer me a trade. Here at 12 o'clock, why didn't I get up at 12 and trade? Because that's not the rules that I have for myself. I trade during a specific time and I take the opportunities that are presented to me. If I don't see the opportunities, then I don't take them for that day. I think that's where a lot of people are very quick to want to pull the trigger. I call them trigger pullers. I want to get into trades. I want to get into trades. I want to take as many trades as I can. No, it is about really evaluating each and every trade. When I go into a trade, I am 100% sure of why I took the trade, how long I'm going to take the trade, and I monitor the position. So I monitor the position until it is closed. For me, for my trading strategy, you would see on this trade, I'm actually watching it. So as you can see, let me just open up the chart here. The volume is not really coming in a lot. Obviously, that's right, because the American market is shut right now. They're only coming in at about 4 o'clock my South African time. So I can be looking for a lot more upwards movement, and then later in the day for a retracement to come down. And obviously, the simple moving average is pulling upwards. So am I looking to keep this for the whole day, maybe until about 4 o'clock? When I get around about 4 o'clock and I do see that my trade didn't TP, I will normally close it out and take whatever profit I can take from it. If it is running into a loss, I will take the loss and accept it as the market took from me. Trading is all about give and take, guys, give and take. So I will be looking. So one of the strategies that I have is as soon as my trade pulls into the positive, and I achieve the 1% that I'm looking for, I will actually close off half of my position, bring my stop loss to break even, and see where the market takes me. If it does bounce back, then I didn't make a loss on it. If the market does go to 1.5 or to 2%, I will be trailing with a stop loss. So my stop loss would then be the point where I exit, and I will then take the maximum of the trend. And one of the things that I do find is if you actually trail on your red line when you're above, you tend to, have a good margin to play with, and you tend to catch a lot of the momentum in the market. Let's have a look at what's going on with the New Zealand. Okay, so obviously we had a lot of upwards movement. I did miss this one as well because it was outside of my trading time. I only start trading at about 8 o'clock. But what I'm enjoying is I'm seeing some upwards movement in the short term. And the volume was absolutely amazing during the night. So, one of the things I am looking for is maybe a retracement towards the moving average, and then some more upwards movement depending on what the dollar does. The dollar did have a huge sell-off yesterday. Other than that, okay, so on the Australian US dollar, we did see some upwards movement here. But I don't see, here is a breakdown. So again, I don't take any downwards. I don't take any selling opportunities when it is above the 200 days. So today I'll be monitoring it, but I don't think that in the odd USD, unless there is a big change in momentum, that I would be taking a trade there. Let's have a look at our US dollar, Japanese yen. Okay, so guys, this is actually a funny one. I laughed this morning when I was looking at this. It was almost like my indicator lost the price for a moment. It's like carrying on, like, where's the price? Where's the price? Where's the price? And then the next moment it realized, oh, here's the price. And it went all the way down. So this is just a joke. I was laughing about it this morning. I was like, what the heck is going on with my indicator? This thing is going straight when the price is like way at the bottom. Guys, when I see these things, I get out of it. I don't even touch it. But I am looking right now. As you can see, my indicator's pulling through back towards the upside. So I might be looking for a buy opportunity here today. Then obviously on the Euro Canadian, okay, so it's broke towards the upside. It's moving up towards the 200-day moving average. It's below it right now. There's no opportunities for me. So I'm going to bypass this. I'm going to maybe leave it alone for today. Again, same thing here. Guys, the reason why I'm passing these by is because of my strict rules and my trading strategy. I don't play around with my trading strategy. I have strict guidelines, strict rules, and I stay within them. I don't move outside of them. I actually find more reasons not to take a trade than to actually take a trade. So I have a strict guideline, and if I tick all my boxes, I go in on the trade. When I do go in on the trade, I accept that I've taken the trade, and whatever happens, happens. I don't allow myself to beat myself up when the trade goes wrong. All right. So yeah, this was a really good one. I wasn't really watching around, but this is a really good one. So no, it is a good one right now. It is showing some more upwards movement. So I'm going to keep a tag on this one because my indicator is starting to pull above my 200-day moving average. which is showing me some upwards movement. I am looking for it to retrace back into my indicator because that is what it does, or maybe just touch, go in and go back up, which means I will be taking a long position on the euro Japanese yen. So that is pretty much how I trade in a nutshell. So every single day I will break it down for you guys on why I took a trade. So right now, the reason why I took this trade is because I had this massive amount of volume coming out of the market here, right? So you can see it broke through my indicator. It's underneath my 200-day moving average. The volume is there. It's above the moving average inside of my volume indicator. And I normally look towards, so I would put my stop loss to the top here. As you can see, the green bar is coming down. That's a good indication that the market is going down. And I will be trailing my stop loss with this. So I'm waiting for a downwards break because I do think the uptrend, and this is where I come to market structure, guys, is I can see here that there was an uptrend, right? And then I see at some point the uptrend was broken, and here it was broken, and it's now moving down. So right now it is creating new key levels for me. So I'm observing the trade, and this is something that an indicator can never give you. This is something that comes through study and through experience and through taking the time to get the basic understanding of how the market works. So even if we go to a higher time frame, like the 30 minutes, I am also looking, you see, even on your bigger time frames, you can clearly see that the trend was broken and we are seeing a downwards movement, right? So I am looking towards taking another test here and trailing it, because if we are looking towards a downside for it, you can see also from the market structure here, it is making lower lows every single time. So yes, there is an opportunity that it's going to hit here and break through towards the downside. As you can see, my lot size is not big on these trades. I don't like to have these huge trades, these massive trades of thousands and thousands of dollars. That's my personal opinion. I'm not saying that's what you have to do. You are more than welcome to go and take bigger trades for yourself. But for me personally, I like to accumulate smaller amounts, and I don't want to risk too much of my trading account. So I only risk 10% in total for the day. So that means I take 10% of my account and I allocate it towards trades, and I work with that 10%. So if there's an opportunity that presents itself, but I've already got enough trades in, I don't take more trades because I have a strict risk management system. And because of that, I'm able to stay profitable in the long run. So as you guys can see, it is starting to move in my direction. Volume is starting to come in. So let's see. I do have a good feeling about this one. NASDAQ. So there you are, guys. We had a TP on this one. That was awesome. Yay. So we have another 0.19% in the bag on the trading account. That is really, really awesome. I absolutely love watching that. And then, as you can see, while we were busy talking, this one is starting to show an uptrend. Again, we are seeing, you're seeing that market structure. It's building. So obviously here, there is a bit of a breakdown. It's not getting past this key level, but we'll be watching it for the day. You need to watch your trades. You need to see what the market is telling you. And as the market is adjusting, you adjust accordingly as well. So this is really exciting. So this is pretty much how I trade, guys. Now, the reason why I'm showing you this is because you need to be in the market every single day. You need to be observing what the market is doing. But one of the key things that I find where a lot of people lose a lot of money is they want to trade everything. I don't. I only trade these pairs. I don't trade outside of this. I know these market structures really well. As a matter of fact, my trades that I take on the NASDAQ, because I'm a Forex trader and I'm really good at Forex trading, I actually have someone that is really, really good at the NASDAQ, like really good. She's amazing. I've been following her trades for a while. Her trades yesterday, she called a really nice trade on the NASDAQ. It hit 2 TPs. We are looking towards some more TPs if the market goes in that direction. But the reason why I'm sharing this with you is because we as traders believe that we need to know everything. And that's not the truth, guys. You need to be a specialist at where you are good. I'm good at trading these currency pairs. I'm really good at it. I'm able to identify a trend very well. She's good at the NASDAQ. She's really good at it. She understands it. She knows the Dow Jones. She knows exactly how they function. So what do? I support her. and I join her group to say, okay, when we are trading the NASDAQ, when there is trades that she's calling on the NASDAQ, I am joining in on them because I'm leaning on her understanding of the NASDAQ. And that's the beauty of trading. It's not about you. You get into your rhythm of what you like to do. But then outside of that, go and look for really good, profitable traders that have niches in other types of markets. For instance, there's other people that are trading indices. There's other people trading this fast-paced trading. I mean, this time frame trading. That's something I tried. No, that didn't go too well. I can't see. I'm a pattern trader. I'm a trend trader. So for me, I don't see that. But there's nothing wrong in finding a mentor in that specific zone and allowing them to show you or to call trades on your behalf and trust them that they are calling some good trades that you can take. One of the things that I always do before I join any mentorship program is I ask, can I join a free signals group or that? And I actually trade the trades, and I trade it for at least about 3 months to see what the P&L is. So I work out the P&L. So I open up a separate demo account, and every time they pull a trade, I will go into that demo account and I will take the trade. And then over a 3-month period, I would look at what is the profit and loss ratio. And if I do see a good profit and loss ratio, then I actually fund that account and I use that account to trade the strategies. That is something that I personally do. That's how I trade. And it allows me to monitor different accounts. But it also allows me and gives me the freedom to not want to focus on everything. So guys, what I thought in this hour, what I would do as well, is I actually want to share with you some knowledge, because at the same time, knowledge is power, and understanding trading and being growing your knowledge is really going to help you to become profitable and sustainable. So one of the things I wanted to share with you guys today in this hour, I see I'm actually moving through everything very fast, but I think we will just have a look at the market before I end it off, is I love to spend my time learning while I'm trading as well. So whenever I do trading or I do go into specific trades, I actually take the time to read up as well. So I do a lot of reading in the trading sector. I've got a lot of books. I've got a whole stack of books that I work through. I try and get through a book at least every 2 weeks. And I reread books, because sometimes when you read it the first time, you don't really grasp the concept. But the moment you spend some time in the market and you come back to the book, you realize, oh, now I understand what that person was saying. Guys, and there's no such thing as a bad trading book. I'm going to be honest with you today. You can learn from everybody. You have no idea how many trading strategies are out there that are profitable, and everybody has their own niche and their own flavor. But what I wanted to spend time on this morning is I want to learn with you guys. So what is a trend? I think this is very, very important to understand. The first thing you need to do before you decide to become a trader is you need to understand what a trend looks like and how to identify it like this. I don't need indicators. I don't need lines to identify trends, because I've got a 10-year, I've literally got a 10-year eye. So I'm able to look at it at a market, and I'm able to visually with my eyes pull the trend lines in and say, okay, this market is either going in an uptrend, a downtrend, or what we call consolidating. So it means that the market is playing between two specific key levels. So, but that is one of the things that you need to know. So I thought, let's learn together this morning. So guys, what is a trend? A trend is a channel. I always call it a channel in which you can identify, is the market going up? Is the market going down? Or is the market moving sideways? Now, I am very good at breakouts. I'll be honest with you, that's where my bread and butter lies, is I am very good at trading breakouts. But breakouts are also a very tough trading strategy, because it can break out twice. It can break out 3 times. and give you a false signal. And every single time you are taking that trade. So the big part about breakout trading is you need to have very tight stop losses. So I would not recommend breakout trading for anybody starting out. I would rather recommend trend trading, identifying the trend and trading with it. All right. So let's have a look at an uptrend. So an uptrend pretty much means that you have higher highs and higher lows. Okay, so you can clearly see the market coming back, testing key levels, breaking down every single time. So that is what we call an uptrend. So that means you are seeing higher peaks and higher lows, right? As I call them. And every single time you can see. And then where's the trend line? The trend line you draw underneath those higher lows. Okay, so that is the trend line that you are drawing in because you want to trend that properly. I will show you that on the charts now as well. So I will show you some uptrends, some downtrends, and I'll show you some consolidation as well. What is a downtrend? A downtrend is it's making a lower low and then a higher low and then a lower low and then a higher low. So it's literally, it's also bouncing, but in the opposite direction. Where do you draw that? You draw it on those lower peaks, right? Because you're looking for the market to break out of that pattern. And that is how you identify when a market is breaking structure. So why is structure so important? Because when you are trading with the trend, it's easier to scoop money when you are going in the direction of the river than wanting to swim upstream. Trust me, as a trader, you will not become profitable if you only trade against the trend. I do know some traders that are brilliant at breakouts and being able to stay profitable that way, but they have years and years and years of experience on that. So it's very, very important for you to try and trade with the trend. Identify what is happening in the market. And where I think a lot of people fault, and I faulted there, is I would trade on the 15-minute chart, right? Then I would identify my trends on the 15-minute chart. That's the wrong way to look at it. You need to go to a higher time frame. So normally I would identify trends on my 1 hour or my 4-hour chart. I preferred the 4-hour chart because the 4-hour chart really shows you a long-term trend, right? So normally go to one higher time frame than the time frame that you are trading on to identify the trend, and then look inside of that trend for opportunities. All right, that's what I like to do. And then obviously, what is a consolidation period? That means a sideways trend. It means there's 2 key levels and it's bouncing. So how do you do that? You literally look at where are the tops, the highs and the lows, and you draw the key levels in. That is trend. So that is how you identify trends. And why is it important to identify? Because you got to go with the stream. So I always say trading is like 2 groups, right? You've got the buyers and the sellers, and you have to identify at this moment, when I take this trend, are the buyers going to win or the sellers going to win? And you trade with what they are doing, what the market is doing. And if you really get good at that, you can stay profitable over a long time. So here, okay, this I'm not going to go through. This is a bit more in depth, but you're more than welcome to send a message to me, and I'll get you guys all these books. I've got a lot of books that I share that you can get and dive into them and start learning. So let's have a look here. So here you can see obviously a trend line that was drawn in. So here is, like I said, it's an uptrend. You can clearly see it. The market's going up and down, up and down, up and down. So obviously we can see an uptrend. And what do? We draw that line at the lows, the higher lows here, so that we can see that when price breaks through it, we have a directional change. And then we want to observe, is it going to go sideways or is it going to go down? That's what you need to identify. Okay, so all right, so this is some more stuff that you can work on. Guys, please do send me a message and get the book. It's really, really an awesome book. But now let's quickly go to the market and see if we can identify these trends. Because I think it's so important to put your time and effort into that, to truly identify these trends. And one of the things that I do find is a lot of people, when they start out trading, they're so quick to want to take trades instead of just spending a week or 2 weeks in the market and identifying trends, practically applying what you've just learned. and not to take trades, but to rather understand market structure. And if you do that, it will really help you in the long run. Really, it does. I'll be honest with you. I spend a lot of time just identifying trends, seeing what the market does, how it does, how does it evolve? How does it change? And that allows me to become better at what I'm doing. So as you guys can see, I trade on the 15-minute chart. So normally I would go to the 1-hour chart and I would look. You see, on the 1-hour chart, I can clearly see some trends forming here. So as you can see, let me just bring my volume indicator down a bit. So here you can clearly see. So let's have a look at it. Here we had a bit of a down here. And then, so here we can see a lower, right? So what you can do to identify the trend is take your indicator and simply just draw it across here, right? So there you can see that was the trend, right? And normally, whenever a market breaks a trend, it will have a lot of volume coming in. That's why I use a volume indicator, because that tells me that there's a lot of volume coming in the opposite direction, and I need to be paying attention. So as you can see here, you can see that there's a lot of volume that came in. You had a big candle. Let me just switch off these because I think this is really confusing. All right. Because I want to switch these off so that you guys can look at the market in a bear range. So here you can see here, you obviously had this high and then it made a lower one and a lower one. Here you can see the bottom one. But what we're doing is we're drawing the trend line in here, because we want to identify when it breaks. So obviously it broke the trend, but as you guys can see, here is a long-term trend. So here's consolidation, right? So after it broke the trend, it didn't go higher. It only went higher here. It now consolidated. So what you would do then is you would then go and identify where that key level of consolidation is. It's right here. Absolutely right here. So here is that level. So it came down the market. It then broke out. It touched there. It came down. It touched again. Now it went and made a low, right? So it's going down. But as you can see here, it retraced, tested it for the third time. Normally, the third time, it's going to give you an indication, I want to go further up. And then it broke this key level, and you could take a trend to the upside. So let's have a look at this. Let's say you were observing this market for a while, because this is an hour. But remember now, we are looking for entry points on the 15-minute chart. We're not looking for an entry point here. So then we would go down to the 15-minute chart. And on the 15-minute chart, do you guys see it here? There's the consolidation line. So look at this. Now, this is where candlestick patterns really plays an important role. This is the breakout candle. This. So if you go back to the 1-hour chart, I want to actually make a square around it so you can see it. So you were watching the market, right? And you said, okay, here's a level. So you were watching this. You saw the first touch, you saw the second touch, and the third touch. And each time you were waiting for that breakthrough. You were waiting for the market to come through. As you can see, the market came through and it bounced back. Then you saw the third time. It came through. It didn't break through and it retraced. Now, what are we looking for? I'm looking for a breakthrough towards the upside. All right. So what did I do? And if you switch on your 200-day moving average, you would see that you're looking for a long position. You're not looking for a short, because the market is trading above the 200-day moving average. This is a very, very strong level of support and resistance. So you can actually see here how the market actually moves around it, because this is a very key level for the market. So I would then highly recommend always to use the 200-day moving average, and I would see, here's an uptrend. So obviously I'm looking for a trade towards the upside. Now let's look at that entry point, because I want to highlight that, where's my little box? I have a box. No, that's my emojis. Where's my box? Where is my box? Maybe it's here. So where the heck is my boxes? Oh, well, right. So this is the level that we are looking at, right? Right there. So let's go into the chart further to understand this. So now we go down to the 15-minute, because that's the entry point that I want to look at. Remember, I want to go, you see exactly what I said. What am I doing here? Go away. So as you guys can see right here, this was the breaking point. So what am I looking for? As you can see, all of the other times when it touched this market here, it just touched it and it rejected it. and it touched it for a while and it rejected. But this time it actually broke through. So what am I looking for? Through, or as a trend trade, because now I understand the trend is going upwards. It's now making a breakout upside. So what am I looking for? First of all, I had this candle. You never go in on the first candle. All right. You want a confirmation of the breakthrough. So you always look towards the second candle. Now, what I know with a volume candle is whenever you've got a strong big candle, right? So this is a strong candle, and I'll tell you why the volume is powerful. And this comes back to candlestick patterns, guys. This is why you need to get a book on candlestick patterns. Is if you look at this, there's a very small wick at the bottom, very, very small wick, which means market pushed right up. So it didn't even go down very far. The market decided, no, we are breaking through right now. And there was a lot of buying power that came in, and they started buying. And then it broke through this trend, right? It broke through this line that it's been keeping, that is the roof that it had for a while. And as it broke through, it gave you this candle. Now, this is what we call a resting candle. All right. It's a candle that just, the market is just trying to test it to see, okay, is this level going to hold? And yes, it held. It held, right? So what am I looking for? Do I take the trade on this candle? No. No. This is not a confirmation. This is not a confirmation candle for me. But it is it is a hammer. So it is telling me that the market wants to go a bit higher. So what am I looking for? I am literally looking for this candle to break above this week, to break above this price. So I would take the trade right there. Right there, I would set a limit order and I would take the trade right there and I would go up. So how do I then take that trade? I believe in tight stop losses, tight, and I look towards riding the trade. So I took the trade right there, right on that. When it broke through there, that's the price that I said I want to go through, because that means that it's now going to leave that barrier and it's going to go higher. And I go down to my volume indicator. And what is my volume indicator showing me right here? Right on this candlestick here, I'm seeing, the volume is coming in. The volume is coming in. The volume is pushing, it's pushing. And I see another nice volume candle. And this is looking good for me. So I take the trade there, right there. I set a limit order. And now where would I place my stop loss? Because this is where a lot of it, even for myself, where I get bummed out a lot, is my stop loss. I will normally just set it below this level, because I know this is a strong level. It took four times. On the fourth time, it only broke through. It took 3 times, was rejected. This is a strong level. And what would I do? I would look towards the upside. And what am I going to do? So the first risk reward ratio I'm going to look for is I'm going to look for 1%, right? And that's when I move my stop loss to 0. Then I would go and look for another 2%. Once my price target hits 2%, I will then bring it up 0.5, and I will keep trailing with a stop loss. So in total, I would almost say, where did the market really retrace? I think right here, it would have hit about stop loss right here. And I would have had a beautiful 0.23% on this momentum that the market had out. And I can confirm it with the volume. So the volume indicator is giving me an indication that the market is pushing strongly towards the upside. And this is how I would trade trend. So I see that the market is reversing, that the market does a breakthrough on that. I confirm that the breakthrough is real. And then I look towards taking the momentum towards the upside. So guys, this is pretty much how I trade, how I identify trades. So I think this was a really, really great session today, because we were able to identify a really good trend. But let's look at these 2 trades that I've taken. Because if you see the market is up and down and we're looking at what the market is doing, let's go and look at the 1 hour time frame, as we said before. So as you can see here on the 1 hour time frame, we are looking towards a break of trend. So where do we see that break of trend? Right here. You can see that there was a very, very strong key level right here. So although we had a breakout, remember, this is a big breakout. So when I look at this structure, I can see that we're in a period of consolidation. and that we are looking towards an upside on this market. And as you can see, my trading lines are pretty much in line with what the market is doing. So we are looking towards the market. As I can see, this is a hammer forming here, which can potentially tell me towards upside. But why did I take this trade? Because I do see a strong level of support right here, right? I see a strong level of support here that can potentially push it. Does it mean that the market is going to do what I say? No, it doesn't mean that. Does it mean that I can have a loss on this trade? Yes, it does. But what does it mean? I need to come and reanalyze and look for another opportunity inside of this market, because there is a huge rejection here, as you can see it. So maybe giving it some more time today. Let's look at gold. What is gold doing? Gold has been coming down. It's hit that first point. And as you can see, I'm already starting to go into profit here because I can see gold broke down. And obviously, I also took the profit on this trade itself as well. So I'm already up 0.19%. Yeah. Oh, 0.3%. Sorry, 0.3%. I'm up here. I am showing some profits here as well. And then I have this little bit of a loser here. We will see how it develops during the day. But that is how you stay profitable, guys, is by taking the opportunities that present themselves, accepting that you are 50% right or 50% wrong, but believing that you did read the market correctly. So, guys, thank you so much for joining me today. I'm going to be doing another session tomorrow. We're going to be going through another part of the book and having a look at what's something else that we can learn tomorrow, maybe doing some candlestick patterns, because candlestick patterns have saved my bum many times when it comes to trade. Thank you so much, guys, for joining me. I really appreciate it. And I will catch you guys back again tomorrow on another hour of trading on